The headline is Disney shares notch best day in more than 3 years after earnings bonanza.
Wow.
It's a bonanza, Hamish. And let me tell you about it. So before I tell you about it, to understand Disney, you have to remember they have 3 revenue segments. So they've got their it used to be different, but now it's 3. They've got their entertainment business, then they've got their sports business, and then they've got their experiences business, which is their cruise line, their theme parks, their hotels, that kind of stuff. So that's the first thing to understand. That'll become relevant in a second. So overall revenue was flat. So we're talking about Q1 2024 earnings for Disney, which, Hamish Hodder, ended on the 31st of December, 31st December 2023. Just to confuse you a little bit. So revenue year over year was flat, but they did have a 27% increase in total operating income. So up $833 million for their operating income, and that came down predominantly to their experiences business, making a little bit more money from $2.9 billion to $3.1 billion, and that was as a result of the Disney Cruise Line increasing the average ticket price and the number of cruise days. It also came down to their sports business losing a little bit less money, so only down $103 million versus $164 million in Q4 of 2022. But Hamish Hodder, it was also thanks to a rebound in their entertainment business from $345 million in operating income to $874 million, which notably encompasses their direct-to-consumer business, which you know a lot about, their streaming business. So now we'll zoom in just on that entertainment section. And when we look within that segment, while linear networks revenue declined 12% and content sales and licensing revenue declined 38% year over year, direct-to-consumer revenue actually rose 15%. And when you look to operating income, direct-to-consumer actually improved quite substantially. So in Q4 2022, losses were $984 million for the quarter out of direct-to-consumers. They lost almost $1 billion in a quarter from direct-to-consumer. So safe to say they were bleeding. They were bleeding cash.
Not good.
Yeah, and to be fair, to be expected, they did warn us that this was going to happen, that direct-to-consumer would not be profitable for quite a while. But now they've closed that down to just a $138 million loss, which technically is an 86% improvement.
Yeah.
So they note that this was a result of a few factors, Hamish, which you always like to look at. An increase in pricing, increased advertising revenue from higher impressions, and a decrease in programming and production costs. But interestingly, they also noted that there was a fourth reason for this improvement in results, and they noted that the fourth reason was increased subscriber growth. But then I looked at their numbers and they did not grow subscribers.
Yeah, I saw that in their report and I was like, hang on a second, that's not right. That's not right. But yeah, it is interesting because I think they were pretty flat, right, on their actual sub numbers, but they were able to, I think in the US in particular, raise their prices quite considerably, and they're inching closer towards profitability, which is good to see. Yeah.
Yeah, so let's, with that said, let's talk about their subscribers because they do talk at length about that in their earnings release. So, paid subscribers for Disney, Disney Plus, they call it Disney Plus Core. So just looking at Disney Plus, both domestically and internationally, which is internationally excluding Disney Plus Hotstar, which is in India. So they came in, they closed the December quarter. I want to call it the fourth quarter, but no, for Disney, it's the first quarter apparently. They came in with 111.3 million subscribers, and that was down 1% from the 112.6 million that they had at the end of the September quarter last year. So pretty flat, losing a couple of subscribers here and there. They did gain 2% for Disney Plus Hotstar in India, 37.6 million up to now 38.3 million. And then if we look at Hulu, which is their other streaming service, they went from 48.5 million subscribers in the September quarter to 49.7 million in the December quarter, so up 2% there. So generally speaking, what did Netflix post? Is like some ridiculous subscriber growth, didn't they? But
yeah, I think it was
Disney not quite keeping up.
I'm not sure off the top of my head. I think it was maybe like 8 million.
It was impressive.
Yeah, it was between like 8 and 12 million, I think, something like that.
Yeah.
So yeah.
More impressive than Disney's subscriber growth, that's for sure.
Yeah, I mean, and growing the number of subscribers has been a difficult patch for all of the companies for the last couple of years. It's especially as I think there's been more competition. It seems like a lot of these media companies are now turning to price increases and cutting their content spend as a means to reach profitability rather than just kind of scaling the number of subscribers. So that's certainly what Disney's been trying to do.
Yep. And talking about raising prices, we can look at their average monthly revenue per paid subscriber. So average monthly revenue for Disney Plus Core went from $6.70 in the September quarter 2023 to $6.84 in the December quarter 2023. So a rise of 2%. But what is really interesting, right? So that's Disney Plus, domestically, internationally. Domestically in the US and Canada, it's actually $8.15 average revenue per paid subscriber, whereas internationally it's $5.91. So it is cheaper internationally. But what I found crazy was when you drop down and look at Disney Plus Hotstar, the average revenue per paid subscriber. Now, for context, actually, this is without context. Disney Plus Hotstar average revenue per user grew 83% quarter over quarter.
Whoa.
83%. They're milking them. Yeah. They're milking them a lot more, but that was from 70 cents to $1.28.
Yeah.
So average monthly revenue per paid subscriber for Disney Plus Hotstar, $1.28 versus domestic Disney Plus $8.15.
Yeah. Yeah, it's why kind of total sub numbers is so irrelevant. It's ridiculous that the media focuses on, oh my God, they added 10 million subscribers here and there, because they're all different of different value. I think, more than half of Disney Plus Core subscribers are actually, no, sorry. So they have 40 million Disney Plus Hotstar subscribers, which is a big chunk of their overall base. So, and yeah, they're a fraction, an eighth of the value of their US of subscribers. So yeah, just looking at sub numbers alone is kind of irrelevant at this point. Every platform has their own pricing, and each country has their own pricing. So yeah, it's kind of silly.
Yep. So there you go, Hamish. The only other thing I had to add there is that Hulu pricing went up 1% for just SVOD only, and if you add live TV rather, they have a 4% increase in pricing. But there you go.
Yeah.
Have a little bit of stuff from the... Sorry, yeah?
All I was going to say is it'll be interesting to see how their kind of sub numbers do trend over time, because for Netflix, at least, the way they've been able to scale their sub numbers has been increasing content spend. And we're now seeing a lot of companies pull back on content spend and raise prices. So it'll be interesting to see over the next couple of years. Like, let's say in the US, they've got 46 million US and Canada subscribers. I think Netflix has like 78 million. Will they be able to see that rise to, 60, 70 million subscribers without increasing content spend? Or will they have to, go back into maybe burning a little bit more cash to reignite the ultimate engine, which is how many people they have? Because, if you have more subscribers, then those incremental price increases are much more meaningful than doing it on a smaller sub base. So that'll be something that I'll be interested to watch.
Yeah, for sure. That was the classic tactic. Like Disney Plus, new player in town, they had very, very low pricing because they were just focused on subs in the door.
Yeah.
And now they feel as though they've got subs in the door, and now there's a bit more pressure. Oh, profitability, please. And then all of a sudden they're like, okay, we just got to jack up prices, which lowers the sub growth but makes them more money. You're right. That's the ultimate equation for these streaming services, is finding that right mix between sub growth and revenue generation.
Yeah.
All right, let's talk about the earnings call as well. There's only a few points that I wanted to touch on. Bob Iger hopped on the call. He noted that ESPN channels will now be available direct to consumer in a joint venture between Fox and Warner Brothers Discovery They're going to create a new streaming sports service launching in fall. So this brings together content from all three I want to say manufacturers. That's not the right word. All three companies, and we manufacture sports content.
Scripted content.
So that will be interesting. And then Bob Iger also noted the fall 2025, they'll offer ESPN as a standalone streaming option. Probably the biggest breaking news from their earnings call was they're taking a $1.5 billion equity stake in Epic Games to collaborate on Fortnite and bring Disney into that game. So Iger noted that they'll work together with Epic to create new games using Disney's intellectual property, including Disney, Pixar, Marvel, Star Wars, and Avatar, that will live alongside Fortnite, but will be completely interconnected with Fortnite.
Right.
So I don't know what he's saying. It's a new version of Fortnite. It's a Disney version of Fortnite. Who knows? Yeah. I have no idea.
That's I actually I didn't see that yet. So that's really fascinating to see.
Their biggest foray into video games ever.
Yeah, wow, that's crazy. Yeah, do we know how much money? I don't think we know how much money Fortnite actually makes. Like, I don't think there's official numbers on that, right? But it must be bringing in an enormous amount of money, and they've certainly pioneered a very, very successful model in the gaming space, which is kind of a free game, and then people spend money on skins and battle passes and that sort of thing. Fascinating shift in the gaming space.
I don't think we've got actual numbers. I'm just doing a quick Google. It says Fortnite has generated revenue of over $26 billion to date. Out of this, over $6 billion worth of revenue came in 2022.
Wow. That's
crazy. But it's still, I don't know how reliable that data is, because that is not from an official source, but that's just a quick Google. But it's a lot of money, Hamish.
Yeah. Crazy.
They make a lot of money. Yeah. So that'll be very interesting to see. I mean, this will take a long time, no doubt, to see what they come up with. Don't expect that to have any meaningful impact to anyone anytime soon. They also announced that that Disney Plus will stream an exclusive version of Taylor Swift's The Eras Tour, the movie, on Disney Plus, and they'll also release a sequel to Moana later this year. And after all of that, Disney stock jumped 11%, Hamish. So quite a jump.
11%, did it actually? Wow, that's crazy.
Quite impressed.
Wow.
Quite impressed with the earnings.
There you go.
But there you go. That's Disney earnings, my friend. That is Disney earnings.